in listen-only mode.
Hello everyone and welcome to another FxEdge Power Hour. I am Marcello Ducille. Today is January 31st, 2013. I'm going to do today what I've done for years, which is an analysis of the markets and evaluation of our strategies, which are based upon the 5 p.m. Eastern Standard Time, close of our daily bars and our 4-hour bars. Thereafter, we will have a brief questions and answers session, so let's go ahead and get started here. All right, so I'm going to start with my marquee strategy here, and that's the Swing Trader Pro strategy. That's the STP5. Okay, we're going to talk about the euro dollar, pound dollar, Aussie dollar, dollar Swiss, pound yen, euro yen. And really, guys, what we've had here is we had a consolidation. I'm going to start with the euro dollar. We had a consolidation for a little while, and you can see it over these last few days. And then we finally had a breakout of that range. It's kind of difficult to see here. So let me open it up a bit more. Okay. So we have this range, this back and forth in the market. We talked about it. And then finally we had a breakout of the high here in our previous high as well at 134.00. We passed that area, and we had a retest of that area. You can see price continue to move up. And basically, guys, our next area of support resistance at 136.00, and then we're looking at 136.50. For the time being, we see price holding right here where it is. So for us, what we're looking for is, you can see here that we dropped in price down to 1.3540. So our low is 1.3540, and our high of the day was 135.92. 52 pips of range is not a lot of range on this particular currency pair that's known for doing about twice as much as far as range is concerned. So what does that mean to us? It means that there's a day of hesitation here. We may see another day of hesitation or 2 days of hesitation. You know, we may very well see that going forward if there's going to be a continuation of this move to the upside. May see a couple days of that. So let's just go ahead and wait and see what happens. You know, we can only know as we go. You know, it's kind of it's one of those things that you have to watch it as it unfolds and make decisions based upon that. But from what I'm seeing here, today was definitely a day of consolidation. It was a day of hesitation, if you will. Nothing really happened. You can tell by the range. You can tell by the look of that candle. It's not exactly a doji, but it's a doji-like candle. There was movement to the upside approaching 3600. It was a no-go, rejected off that area. A move down was also rejected as we hit the 1.3550 area, and you know the market rejected that as well. So we kind of closed very, very close as far as opening close are concerned, about 8 pips away. So the open was at 135.65. and the close was 135.73. So 8 pips difference here, and so for those purposes, you know that this was a day of hesitation. Okay, so where are we as far as the euro dollar STP is concerned? Well, the STP here, we have a change from red to green, gives us a buy signal. You can see it down here. We jumped into a buy. I wish we were a little bit bigger as far as lot size and position sizing here. This one is up 202 pips. You can see here that we had an entry at 133.74. Stop loss at is right now at 133.74. Stop loss at the time was about 80 pips away, so that gave us a lot of leverage too as we get this move to this upside. We're actually 2 to 1, 2.5 to 1 as far as risk to reward on this particular trade, which is very good. So we're hitting the peak here. We've moved the break even. We've got our trailing stop engaged, which has not yet been implemented because we don't have enough trailing stop bars, but we've got enough distance. 204 pips gives us enough distance for us to potentially see the market meander and then give us another opportunity to continue in one direction or the other. So there you have it. That is the euro dollar. We're going to have to wait for some price action. 35.50 has proven to be a strong point for us to watch. It's maybe potentially a point of decision, maybe a retest of that area. And then we can see this 3600 area as also a point of decision, an area where the market has to make a decision, and we can see the price break right through it or come back. So today is really a non-event. It is a day that really gives us nothing one way or the other. But the overall move is to the upside. Therefore, our bias will always be to the upside until we know that we're in a consolidation or we see a determined reversal here, and we don't have either one. Okay, so the dollar Swiss. Dollar Swiss was an interesting one as well. Very same pattern, very similar, I should say. You can see that the dollar Swiss is a little different though, because it gives us a little bit more information. And what it's really telling us here is that this 90-90 area, this 9100 area is holding very, very well. So you can see here we've got our area of support and resistance set at 0.9088. Now, if I look across here, you're going to see multiple points where the market is confirmed believing this area is an area of support and resistance. So here we have a low of 0.9086, 0.9084, 0.9094, 0.9090, and our last 2 points here are 0.9091, and finally one dropped down 0.9074. So all in that range there. Very strong areas, very strong area of support for our purposes at this particular moment. So it'll be interesting to see what the market does here. We could see potential push up, maybe a retest of this trend line that continues to be relevant, and potentially at that 9200 area, and then we can see where price goes from there. At this juncture, we're currently flat in the market on the dollar Swiss, but we did call a very, very good discretionary trade on the dollar Swiss. I'm going to show you that. Yeah, I've got a lot of stuff on this chart, and that's what happens when you, when you do a lot of analysis. It's a part of the game. But what I'm going to do is maybe change the color, because we do need these areas of these fib areas. We need these areas of support and resistance so we can properly map the market movement. And remember, memory is very important for us. All right, so we had a reversal candle here formed, a small one followed by a larger one that retested that 93.80 area. The top here, area of support and resistance. It was a previous high. The previous swing high was right there at that 93.80 area. Two of these gave us a hold at the 200 EMA gave us a very strong sell trade here on this particular currency pair. It was about 60 pips of risk. Our downside, we could have potentially seen about 100 pips. So to us, that was a good risk-reward ratio, and it actually did much, much better than that. It's actually fallen. Maximum favorable excursion of 252 pips and 233 pips. Also, guys, there was a correlation here with the other currency pairs, which showed us that there was going to be dollar weakness, and so there, as a result, this was a high probability trade. Not to mention that we did have a change from green to red. It was a little too high for us to take the sell here, automated, but it was a very good discretionary trade. And I'm telling you, even when the trades don't work, if you want to take a discretionary trade using these STP indicators, they are powerful. Look at this, beautiful signals. They give you some decent movement in most circumstances. So it's one of those things that you should consider doing and looking into. And certainly when we give calls here, they tend to do well. Okay, so we talked about the pound dollar, and the pound dollar actually did extremely well today. It's not correlated at all for whatever reason, and it's just continuing to move up. So we talked about this railroad tracks, and if you look back at the prior, and I recommend highly that you take a look at our market analysis going back. So when you hear me talk about these things, you can see, okay, yeah, he said take a, we talked about taking a buy here, and this is what the market actually did. We talked about taking a sell here, and this is what the market actually did. Those are things that are important for you to truly understand, just how this thing really works and how uncomplicated it can potentially be, and just to catch on to the mindset that I'm trying to convey, hopefully, on one level or the other. All right, so the pound dollar here, we have a nice railroad tracks here at the bottom, and it's also on a very strong area of support, which is the 5750 area and down to the 5700. So the lower points were really at the 5700 area, a higher point at 1.5750. So that was our real area. There was a cross here giving us an even stronger area with a previous trend line that was at first a negative force trend line, and is now it's an area of support for our purposes now. So you can see price dropped, railroad tracks, and then retested that trend line like I said it would, and then pushed itself up. It actually didn't even stop at that 58.33 area. It stopped at the 58.50 area, which makes sense to me as well. So it goes up to 58.73 is the high, and it kind of sits around here, kind of sitting around here where we are. We're going to see where the movement is. We don't always get it right, but I think these videos can definitely be helpful. I know that they're helpful for me in my reviews. This is why I continue to do it here with you, because in my own personal trading, I make sure that I'm here at 5 p.m. To make sure that I have a proper market overview and understand where I believe the market's going to go. So as far as this pound dollar is concerned, we do have a buy bias still on this trade. And we're looking for retracements at the 5800 area, potentially to move back up. Our next area of resistance will be the 1.5900 area, and that's where we're looking for some potential rejection of price or some form of a stop along the way, some form of reaction by the market. So 15800 and 15900, so about 100 pips there. To look toward that, and we do have a buy bias on the pound dollar. All right, so the pound yen. Pound yen was a tough trade because, we didn't lose money on it, but we didn't make money on it either, which is rather. It's kind of sad on this particular trade because we could have absolutely done that. We had a change from red to green, gave us a buy signal. We jump on the next day, and you can see here that the next day was not very good to us. It was hard. We went down about 150 pips, and good thing our stop was farther away, and so we were able to stay in this trade. All right, the price comes back up, and it does hit our move to break even point, and when it moves to break even, it falls down again, retests that area in intrabar, and so it closes us out at break even, and then it takes off again and moves up 212 pips, and we would have really liked that trade to be in our books right now, but it closed out at break even because the 50% stop loss got it, really got us there. So, that's just that just happens sometimes in the game, and you just gotta, you gotta be prepared for it. Sometimes your risk management and we have very good risk management now. The risk mitigation with moving to break even is excellent, and it's going to help us to, continue to limit drawdowns and to be able to get to more of that profit, and it has done that certainly. But sometimes it's also going to curtail some of the profits, and that's just a part of the game. It's two sides. It's a double-edged sword, so you've got to be prepared one way or the other. All right, so we talked about this Aussie dollar. So as far as the pound yen is concerned, we have a buy bias on the pound yen. Okay, so let's go over this again. Euro dollars buy bias, but it's currently in hesitation, so there's nothing going on there. Kind of a consolidating here. The dollar Swiss is definitely. I'm looking for. It's not doing anything. It's kind of giving us the very same movement, 91.05 with a close at 90.99, so 6 pips difference here. It's kind of a doji-like formation. They do fall in line together, the euro dollar and the dollar Swiss. I don't. we could potentially see a push to the upside here, and a test here on the dollar Swiss of this high here, this trend line here. So I really don't have a bias on this one either on the euro dollar or on the dollar Swiss for the time being. Really, I'm just seeing hesitation in the market. We may just see, price play around here until it makes a decision in what direction it wants to go in. But I am certainly looking at this trend line. I think that's going to be an area to watch. And this, of course, this 90.88, this area of support is also going to be strong for us to watch. Pound dollar, once again, buy bias. I'm looking at 5,800 as an area for a little retracement there and a push forward. I want the market to test that. Needs basically a springboard, if you will, to bounce off. So it's going to drop down, bounce off, and kind of move forward. The pound yen has definitely a buy bias at this particular time, and you can see here that the pound yen is actually sitting at our next area of support and resistance, which is at 145.50. So we've got 145.50, and it basically took a stop right there at 145.50, but it definitely has an up bias. We're well above the 200, well above the 50, and it still looks pretty strong from where I'm sitting. Aussie dollar now. Back to the Aussie. Aussie dollar has been a good trade in 2013 already. We had some decent trades. Changed from red to green, gave us a nice buy. Changed from green to red, gave us a nice sell. That was very nice. Then we have price action in here. So basically, guys, this price action in here is kind of what we expected. We expected a little play between the 50 and the 200, and we expected it. So really, when we had this nice hesitation, if you will, here, we expected this move to the upside, and we expected it to come back to this 200, to this 50 MA. Sorry. Now, when we hit the 50, we expected that there might be a reversal as well, because now you're bouncing between two areas of support and resistance. And there's really nothing to say there besides consolidation, because that's exactly what we're looking at. We're looking at a consolidation. So we could see some more play in between here until the market itself is ready to give us something. So the question is, when's non-farm? Non-farm could very well give us a nice push out of that with the Aussie dollar. Could give us a nice push forward on the euro dollar as well, and that's what you're going to have to watch for coming into Friday and looking into the next week. Is that we'll be looking for potentially a breakout of these areas if there is some new information that gives us that opportunity. So that is the Aussie dollar, and it's in consolidation. So euro dollar, dollar Swiss, and Aussie dollar are currently in consolidation as far as I'm concerned for the short term. Certainly the Aussie dollar is very indicative of what you would expect an Aussie of a consolidation to look like. The euro dollar and the dollar Swiss, they're just taking a pause so far, but there's hesitation here. And if you look intraday, there was a lot of hesitation there in the market, and you can see that consolidation on the lower levels. Pound dollar, pound yen. As I said, pound dollar and pound yen have a buy bias, and they still have a buy bias there. Aussie dollar, like I said before, and of course our euro yen, which continues its assault on price action here. It's just moving forward, continues to move up here. You can see here that we had a euro yen trade, changed from red to green, gave us a buy signal. We jump in at 120.92, which is about 16 pips away from where we should have jumped in on this trade. And we're currently up 364 pips. If you took that trade with us, you should be a happy camper right now. You should be very, very happy. Price moves up very nicely, and it just continues to move. So hopefully we'll have that continued movement here in the markets. There's nothing else to say. It looks beautiful. It looks great. Yeah, it looks very good. Now, guys, keep in mind at some point this euro yen is going to have to come down. Anything that goes up must come down. It's a reality of just the way everything works. And so we'll have to be waiting and looking for a good place for a reversal on this euro yen, a good place for us to see a correction on the euro yen. But we have none of that so far. We don't see any signs of reversal here on the euro yen. And so we're just going to have to wait. But we have separation away from this this 50 EMA at this point. Well, we're far away from the 200 EMA as well. So, you know, at some point elasticity is going to take over here, and we're going to see price pull back on the euro yen. Okay. Let's take a look at our 4-hour trades. Basically, we had a beautiful IBO yesterday. You can see how small this IBO is. It's 15 pips, about 17 pips of total risk on this trade. Hits our first take profit. Price continues to move up. 96 pips is the maximum favorable excursion, still sitting in the market with 80 pips. 80-90 pips, that puts us at a 4-to-1 ratio. So if you even had a 2.5% position using 90% trend percent, then you could be up about 10% on this particular trade. So those are great numbers so far, and if this thing continues to blast forward, this could be an amazing and very exciting trade on the IBO. So, you know, we'll have to keep our eyes peeled and see what happens. We do have a trailing stop engaged, 2, 4, 6, where am I? 8, 10, and 12. So we have a few more bars to form, and then we'll be in our trailing stop, and we can move our stop from where it is at break even to potentially into some profit. So we'll watch that. IBO, you know, as progresses, as price also continues to unfold. Okay, so the next trade was the reversal candle trade. So we had a nice reversal candle trade right here. Total risk on this trade is about 50 pips, and you can 40 to 50 pips, sorry. And then you can see how price moved to the upside, giving us a nice 135 pip maximum favorable excursion, sitting in the market right now with 120 pips. And that, my friends, is how it's done. I mean, this IBO Rev has done extremely well. Last year in 2012 is doing very well now as well. You know, it's one of the trades I'm looking at very sharply, and I have been for some time now. Okay, so we have the euro dollar. So let's talk about this euro dollar. We had, you know, basically we had a beautiful buy trade. So this Quattro, FxEdge Quattro, we had a change from red to green, gave us a buy signal here, 133.17, and you can see price moved up immediately. Then it went sideways. It never came back to our stop loss, which is at break even, and it continued to move up to a maximum favorable excursion of about 280 pips. It's currently sitting in the market about 257 pips on this FxEdge Quattro. Now, if you missed that entry, there was another entry. It changed from red to green again, gave us another buy entry here, right on a nice, what I like to consider a continuation pattern. So nice 2 dojis, almost 3 dojis here, followed by a push to the upside. That's kind of what we expected. We came in on the doji, 27 pips of risk on that one. Price goes against us 4 pips, and then in our direction here, 105 pips, currently sitting in the market at 92 pips. It just doesn't get better than that. So these also, guys, these changes from green to red here, these are not valid because they're too high. They've got too much buy pressure for us to, so we ignore the buy, and we continue to look for, we ignore the sells, and we continue to look for buys. So these are just too high for us to consider sells from here. Okay, let's take a look at our other currency, our other trades here. I wonder what this is. All right, so this is our ATR Sniper. ATR Sniper closed out here. You can see here that it closed out for profit. I think some people are still in their ATR Snipers. We actually closed out our ATR Sniper, let's see, I guess earlier today. And let's take a look at our TT3. Our TT3 is currently up 82 pips. You can see this trade. Below, we had a change. We had basically a pullback in the market, giving us a nice reversal candle here. Nice triple threat reversal. 23 pips of total risk, not a lot. So we have a nice big size for this particular account. Okay, and then you can see that price took off, goes up 87 pips. If we do see another push to the upside, it's going to be very, very nice because we have very limited risk here. We have about 25 pips of total risk. So every 25 pips that we go, we're actually doubling our returns on this particular portion of the trade, and that's why 90% trend percent becomes such an important tool in getting where we want to go, which is maximum profitability. Okay, so we're currently up 82 pips on the triple threat 3X, and that's pretty much it. That's all, folks. Now okay. Let's see. Okay, FxEdge gone crazy. Just checked on the dollar Swiss, and they want 8 pip spread. Yeah, that they do that sometimes, and they're not the only ones. A lot of people do it, and a lot of brokers do that. And you know, of course, the spread's going to go back down at some point, and it'll go back to normal. I'm not sure what it looks like right now, but. Hey, Annette, thank you very much for contacting me. I'd love to know what's happening myself. Thank you very much for that. Hold on. Let me take note of this. Okay, I'll take care of it. No, absolutely. If you haven't heard back from customer service, I can get to the bottom of it. I'm pretty sure, you know, they do a very good job of getting back to people, I feel. And so when you don't get that, it's okay to bring it to me here, especially you, Annette, who've been with me for a very long time. And you know, I'll deal with them. If you've tried multiple times and for some reason can't deal with it, can't get through to them, it's probably because you may want to check your junk mail. I always say that. In many regards, it has been that issue for many of our clients in multiple situations. I know that may not be the case with you, but it'd be a good idea for you to check that area because they have been historically very good with getting back to people. Trailing stop should be 12 bars. There you go, yeah. Should be a 12 bar trailing stop on your IBO rev. That's what it was. Okay, so about Mirror Trader. Okay, so I'm going to get to you. Okay, Betty, so you're, we took multiple trades on the BW this last month. We were really just doing some testing. We want to make sure everything works like the way that it's supposed to. One of our biggest concerns was our last trade copier. We wanted to make sure that other people were able to use any broker that they wanted to, and now we have, you know, about 50 different brokers that are inside of our system and they're working. We needed to know if all the trades would be taken, if there were going to be you know, issues with the servers, if there were going to be people who did not get into certain trades, and so we had to work out those things. We also had to make sure that we had all the right passwords for people as well. So we have taken multiple trades this month. Right now we're currently flat as far as the BW is concerned. Let me take a look, make sure I'm not saying something that's not true. So we're currently flat as far as BW is concerned. We'll be ramping up. You're going to see some smaller trades, guys, that are going to be taken, and they're going to be smaller lot sizes to make sure that you know, also a few higher frequency trades work on all of your brokers, and they do very well. So they'll be very small, and we're gonna start ramping up the trading based upon the robustness of the trade copier that we're using. We're able to do that. And I know that you guys really appreciate the ability to use this on multiple brokers, and that was very important to us, and we're glad to be able to give you that service. So hold tight. We're gonna be going forward with that. There's going to be more guys, more moves. The market is very volatile right now. We were looking for volatility in the last quarter of 2012, and now we're getting it in spades here in 2013, and we expect to see much more of it going forward. More breakouts, more opportunities, and we're also going to be, BW is going to be gearing up as long as it continues to do what it's doing. It's doing what we want it to do, and our staff is staying on top of that. Up until now, also, many of our traders, they did not have the right passwords and logins. So now we've got all the logins, all the passwords. If you still haven't had a trade on BW, you need to check your junk mail and make sure, because my staff has literally been hounding people trying to make sure that they've gotten the right user logins and passwords from them, so that we could go in on your behalf for the trade copying. Okay, so what do you expect from non-farm payroll? Should we stay out of the market until it's over? Well, if you're in a trade, it's really up to you, because honestly, non-farm payroll is really a two-edged sword, in that sometimes it's very, very good for us because we're already in trades and it just catapults us to a whole nother level of profitability. That's great. The other side of it is when you get into trades, right after or during or right before non-farm payroll, they can actually just completely devastate you as far as that particular trade is concerned, which should be using proper risk management anyway, so it shouldn't bother you. In our statistics and in our testing, we don't even give account to non-farm payroll in that regard. We trade right through it. But if you decided you wanted to take it off, I would not be against it. Turn off your software. Now, as far as taking off trades, it's up to you. You could probably move your trade up, I guess, if you wanted to, your stop loss. But I generally just say let it run. If you've got enough of a buffer, perhaps non-farm won't take it down in a crazy way, and you can hold on to that position and be one of those people who sits around and has one of those 1,000 pip runs on a 30 pip stop loss. That's an amazing return. That's 30 to 1 if you get that. So it's something to think about. Something to think about. Okay, hi Marcello. And which of the trades hi Mike, in pairs have you set trend percent to 90% or such a higher level? Honestly, most of the currency pairs look good with it. The only one that I don't like the 90% profile with is probably the pound yen, because we hit a lot of first take profits on the pound yen and not an awful lot of second take profits. So, inverting that is a good idea, and also going 50-50. But as far as the euro yen is concerned, that is a great trade to go 90% trend percent. It really depends on your level of comfort, and if you want to see constant money coming into your account, then you'll go with the 50-50. If you want to have, and that gives us a blend, giving you profitability on the front end, and then giving you the opportunity to see the trend work out. Now, if you're looking for ultimate profitability, that's when we go 90%. That means when price hits that first take profit, you don't make an awful lot of money, and you don't feel anything about it. Okay, because there's nothing to see really, because it's a very small. It's 10% of your total risk. Now that 90% position, now when that thing runs off, then 90% of your weight is on that particular trade. That means a 2.5% position. If you have 10 times your stop loss on that trade, then you're going to be able to, walk away with 20+%, as opposed to walking away with had you gone 50-50 with 15%, which is not a big difference on that particular in that example there, but walking away with 23 or 24% as opposed to that to 12 or 15 is it's substantial. It's an additional 7. It's an additional process. Opportunity for you there. So between 7 and 10%, and that's quite a bit from where I'm standing. Yeah, they sent them to me, Bond. They sent them to me. So I'm reviewing them now, and I'm probably going to need to talk to you, but I'll Skype you at some point. Gotta figure out what's going on there. All right, guys, thanks for your time. I've taken too much of it. I'm looking forward to seeing you next week. Today's the last day of our analysis. Tomorrow at this time, the market will be closed. Good luck in non-farm payroll. Good luck. I'll see you guys next week, absolutely. Monday through Thursday again, 5 p.m. Eastern Standard Time for another edition of the FxEdge Power Hour. Have a good Friday. Have a good weekend. All the best. Bye-bye.